How are SBA 7A loan rates priced, and what factors influence the interest rate for these loans?
So 7A loans are tied to Wall Street Journal Prime plus a margin. Wall Street Journal Prime today is at 8.5%. 2-3 years ago it was at 4.25%. So it's doubled, right? So it's gonna adjust when prime rate adjusts typically. There are banks and lenders that make fixed rate SBA 7A options. Very few do that, but there are. Mostly you see that when there's commercial real estate involved. But I do have lenders that will do fixed rate. Now, right now, I don't think it's a great time to do fixed rate because rates should trend down over the next year or two. So that means if you're fixed in at prime plus 1, let's say, and prime drops down and you're stuck in that for 5 years, you're actually losing. Most franchise startup financing is not going to be prime plus 1 unless you're like a really high net worth type borrower. You're going to be prime plus 2 to prime plus 2.75 is what I see the most as far as the major banks and what they're issuing today as terms. Now, granted, if it's variable, there's different cases, but the majority of the banks are in that range, franchise startups. Now, if you're super solid, are there other banks that will give better rates and margins? Yes, I believe there are, but most of those banks don't have the same experience in franchise financing, so that's where the problem comes in. Even if your margin was 1 point less, but you can't get the deal done because they don't know what they're doing. Also, you want to look for PLPs, preferred lenders, that are actually underwriting and doing everything in-house, not shipping the loan off to SBA. I see this time and time again. People go, I'm going to go to my local bank. Your local bank doesn't understand franchise startups, then it's going to be a problem, even if the rate's better. So I hope that kind of explains why, sometimes it's okay to pay a little bit more, but to actually get a deal done than lose out on a deal because it can't get done. So anyways, hope that helps. The best thing to do is assess what you're doing, your strength, and then the franchise strength. And then is it a build out? Is it retail? Is it a home service business? And then we back in and find the best lender based on that. Go to bookwithbo.com if you have any questions.
Are you trying to escape the W-2 rat race? Or have you always wanted to own your own business? Have you ever thought about owning a franchise? If so, franuniversity.com can help. Our training program teaches you everything you need to know about franchise ownership, from choosing the right franchise to launching and running your business. We have the resources and specialists to help you from A to Z. You'll gain the skills and knowledge you need to succeed as a franchise owner. The best part, it's free to join. Go to franuniversity.com.
Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.